I'm financial reporter Alan Mendelson. I'd like you to meet certified financial planner Brian Gilder, who will take some of the mystery out of annuities.
One of the biggest debates, though, today, which you'll hear in the financial world, is are annuities appropriate or not? It's probably one of the biggest debates, probably the biggest debate as much as should Pete Rose be elected into the Hall of Fame. You have some advisors who will always tell you an annuity is always the solution to your problem. Then you'll have another set of advisors who will tell you annuities are the worst investments on the face of the earth. Now, my opinion is that you have to know your client. That's what I think what we miss in this is that we have to know what's our client's goals and objectives. Now, if you're to invest into annuities, never ever put 100% of your money into annuities. Most people, for some reason, when I review their portfolios, they'll have 80 or 90% of their portfolio with annuities. Annuities are for proper diversification. I would allocate no more than maybe 10 to 20% of my money into annuities.
Where do you get an annuity?
You can get an annuity from an agent, a stockbroker. You can talk to a CFP. You can get them from any type of an advisor. But one thing I would caution people on is when you look at an annuity, if you do not have at least a 5 to 10 year time horizon, an annuity is probably not an appropriate investment for you. Because annuities are designed for 5 to 10 years, most of them. So many people will buy an annuity and they might need the money in a year or two and they will be hit with these big surrender charges. And they don't even realize that because unfortunately in our industry, sometimes people don't disclose what the surrender charges are. So when you're looking at an annuity, look at what the surrender charges are. Ask the agent to disclose that. In fact, I would actually call the company to verify what the agent tells you. Because I think in the annuity business, you got to assume guilt before innocence. Because that's just the way it is in today's financial market. Also, I would also recommend to people to understand what type of an annuity they're buying. You have fixed annuities, you have variable annuities, you have equity index annuities.
Tell me about those differences. Fixed annuity first.
A fixed annuity is basically designed to, it's sort of similar to a long-term CD. It's designed to pay you a set amount of interest for anywhere from a 3 to 8 year time period. So it's supposed to be fixed for that certain period of time.
Variable annuity?
A variable annuity is usually linked to the stock market. So your interest rate will be based on what the financial market does.
And an equity annuity?
An equity index annuity is designed to help you participate in a portion of the stock market. Let me give you an example. Most of the equity index annuities are tied to the S&P 500, and usually they have caps on them. The goal of an equity index annuity is not to lose your principal, but to participate in a portion of the upside of the S&P 500. So if the market went up 15%, you might only receive a 7 or 8% rate of return. As where the variable annuity, you might receive you get the higher amount, but you also could lose principal. So there's a trade-off for both of them. The most important aspect is what's best for the client.
I'm also guessing that rates and commissions will also vary.
Every financial advisor who sells an annuity receives a commission. If they tell you they don't receive a commission, I'd run right out the door. It's just, it is what it is. You're going to get paid to sell an annuity. Everyone gets paid a commission. And there's nothing wrong with being paid a commission if it's going to benefit the client. Also, I think another thing that most people don't do is they don't check their annual statements. I mean, we've had all this fraud going on with the Bernie Madoff and so forth. I would look at my statements every year, and I would also call the company to verify the money it is a correct statement, because most people, you can't trust people. I hate to say it, you just can't trust people today. So you have to double check.
For more information, call Certified Financial Planner Brian Gilder at 310-804-3767. Again, 310-804-3767. I'm Alan Mendelson reporting.